Good morning. Good morning, everybody. Happy Tuesday morning, January 20th, 6:30 a.m. Central Standard Time here in Lenexa, Kansas. Live about 5-10 minutes away from Kansas City, Kansas. And just getting my goodies up over here. All right. We are rocking and a rolling. So, yeah, let me know how you guys are as you come in. And we'll get rocking and a rolling here. What have we got going on today? Well, it was, excuse me. It was quite the weekend / Monday. We did have some more fun stuff going on in the world of tariffs. I kind of jokingly said in my shorts video yesterday that the tariffs of 2025 past were back, right? President Trump's talking about throwing tariffs on the Eurozone again, I think to the tune of 10%, and then possibly going up to 25%, all on the subject of Greenland. So we live in quite the times where every time you turn around, there's a tariff threat being thrown around. Interesting stuff. But yeah, all in the name of Greenland. I think of it as a hostile takeover, which the U.S. has been known to do, right? If you're going back in the history of the country over the last 100 years or so, at least, if not more. I tell you what, a good movie for you guys, if you ever want to watch something very interesting. Good morning, Zilvin. Good morning. Good morning. Let me know where you're tuning in from, my friend. I always like to know where everybody's tuning in from. I know I got some the UK and some South Africa from time to time, obviously here in the States. So yeah, let me know where you're coming in from. But one, Jeremy. Okay, we'll call you Jeremy. I try to always get people's names correct because the name is one of the most important things we have, right? So I always try to get it. But when I saw that, I'm like, I better look at it for a little bit. But we'll call you Jeremy. UK, okay, right on. Anyway, a really good, very interesting movie for you guys to watch it's called Zeitgeist Addendum. I'm just going to type it in here so you guys can. Oh, I got to get my chart up and running. Let's do that. Lithuania, okay, very awesome. Get my screen shared here real quick. But anyway, a movie I was recommending you guys check out, Zeitgeist Addendum, is this thing right here. Now, it's got some real far out there stuff. There it is, Zeitgeist Addendum. And I think you can watch it for free. I think I've watched it for free on YouTube before. But I'm telling you what, this movie will really kind of, I won't play it, but Zeitgeist Addendum. So if you guys get a chance, watch this, because in like the first, when you get about 10, 12 minutes in, for about a period of about 15 minutes, they go over the Thado. Good morning. Coming in from South Africa. Welcome. But this movie kind of talks about the creation of money. So it really is an eye-opener, talking about the fractional reserve banking system and how money's created, and how for every $1 put into the bank, $9 is created out of thin air in place of it, due to something called excessive reserves. So it's a very, very eye-opening movie, Zeitgeist Addendum. You guys have got to check this out. The last half of the movie starts getting far out there. They start talking about a utopian society, and just really kind of a complete changing of the way the world operates. But, you could look at that half as kind of like conspiracy theory type stuff. But the main thing I wanted to mention was really the first, from like the 10-minute mark until about the 25 or 30-minute mark of the movie, where they talk about the fractional reserve banking system. So it's interesting stuff. If you guys are looking for something to watch over the weekend, this part right here, Zeitgeist, money creation and fractional reserve banking. It's this part right here. So I would recommend you guys go check this out. In fact, I'm going to put a link. I'm just going to take and put it in the chat. That way you guys can just check this out. It's all this part on the creation of money is only about 15 minutes. So I'm going to copy and put this in the chat. You guys save this and go check this out. There you go. I put that in the chat. So go check that part out. And if you guys, if you think that's eye-opening, go watch the whole entire movie. Again, Zeitgeist Addendum. So anyway, enough on that. I just thought that would be interesting to share. I think everybody in trading and finance and everything ought to check this part out. They showed us this when I was taking Forex class at Online Trading Academy here in Kansas City back in 2015, actually. So really eye-opening stuff. I'll say no more. I'll give you guys a chance to check it out. But anyway, getting back over to today. Hello, Mr. Peeps. Mr. Peeps in the house. As far as your economic calendar for the day, I was just taking a look to see what Governor Bailey was flapping his lips about today. Just a whole lot of nothing stuff that's that pretty much already know, but interesting kind of how he worded this. Bank of England's Bailey. Oops, I didn't mean to do that. Level of geopolitical uncertainty is a big consideration for Bank of England on financial stability. So just a lot of Fed speak. I didn't see any real details come out of that. Let's go see what happened. So this was at 4 a.m. my time, or 3:45 rather. I don't know. Did it go and mess with the markets at all? I didn't even check the pound yet. I'm usually up for probably a half hour, 45 minutes before I hop on here in the mornings for didn't really get a whole lot of anything out of that. I figured that was kind of a nothing burger. Pound dollar is not really on my watch list at the moment. It's a little too neutral for me. Just looking at the top setups over here. I do have some pound pairs, but it involves shorting it. And it's no surprise because it is one of the weaker currencies. Just going back to the economic heat maps over here, getting an updated look at the eco surprise meter. British pound, okay, it's actually dropped a little bit. So it's now only exceeded expectations on 14%. I got to turn off my space heater. Only exceeded expectations on 14% of its high impact news releases. So it's down in the dumps, down in the cellar, down there with the Swissy. Xander, howdy. It's Tuesday. We out here today. But we did have some movements on some of these currencies. The New Zealand dollar gained some traction, up to 80% now, and the Canada dollar as well. So we've got a new number one and number two as far as currency strength, currency economic outperformance, okay, because of the recent reporting. So let's take a look at that. Let's look at the Canada and the New Zealand dollars to see what changes took place. There's Canada here. Okay, so inflation. So they did have a little bit of a spike in inflation. They're still down roughly at a pretty good area. I mean, 2% is always the goal on inflation when we're talking about the consumer price index numbers. But it did raise by 0.2. Okay, so that's a little bit of bullish strength for the Canada dollar. And as always, guys, these inflation numbers, your CPI, your PPI, okay, which is the producer price index, these have an inverse relationship on the stock market, the local stock market. So Canada dollar had some pretty bullish readings on these last two reports. And at the same time, their stock market, okay, Canada stock market, their main index had bearish readings for that. So this is the same regardless of what currency you're looking at. That's just kind of the double-edged sword or the inverse relationship, if you will, with inflation. So, but yeah, they got a spike on their currency. And then as far as New Zealand, which was the other one, New Zealand, January 15th. Okay, so they had a bullish reading on their purchasing managers index by a long shot. Look at this. Their previous number was 51 and almost 51 and a half, all the way up to 56.1. That's a movement of what, 4.7 points. Yeah, surprise, 4.7 points. So very, very bullish for that report there. And as always, anything over 50 when we're talking about these indexes, the purchasing managers index, anything over 50 is your expansionary number. So it's a good number. Anything under 50 is contractionary. So when you're talking about the two sectors of their PMIs, the manufacturing services, they're looking pretty good, looking really good for the Kiwi. So it's no surprise that bounced it up to 80%. So that's so let's go back here. So that's New Zealand and Canada dollar. The US dollar is still sitting the same at 58%. And the yen is still up here at 67 as well. So dollar yen, as always, okay, we got to keep an eye on the ugly I word, the intervention word for the yen. So let's see if we had any big major movements lately. Not really, just kind of retraced a little bit. We had a close yesterday at the end of the intraday session here at about the, what was that, 158.20 something level. And just a little bit of a indecision candle going on so far. So we start breaking these tops up here. We're going to get closer to that 160 mark, which is where they like to start playing with the manipulation, right? So let me double check here. Okay. So anyway, back to top setups. Obviously, again, we have Kiwi strength. So it's no surprise that we've got It's no surprise that we've got the Kiwi Swiss as the number one bullish signal. Remember, Swiss was down at 14%. So it's the weakest currency when we're specifically isolating it to the fundamental analysis. So that's number one on the watch list, tied with Kiwi yen. So, and I'm even a little skeptical of the Kiwi yen. I mean, it's obviously the numbers of the numbers, but again, when we're talking intervention threats, do we really want to be taking a big position on that? I don't know. As far as a trade goes, yes. But as far as an investment, meaning buy and hold long term, probably not. Because at some point, the banks are probably going to pull the plug, whether it's this week or next week, whatever, pull the plug to try to strengthen their currency, their yen. So if that happens, New Zealand dollar probably going to have a big drop, right? All the major currency pairings with the yen. So little hesitant on that as far as an investment, but as far as an intraday trade, short-term swing trade, possibly. Just make sure we got a good stop loss on that. I'm keeping my eye on a couple potential trade opportunities today. I've already kind of got them put up over here on my other charts. Euro Aussie shorts, which is on my list there, -5. And then Aussie Swiss longs, which is a +6 on there. So we'll take a look at those. They are in my zones as we speak. I'm just waiting on getting a little bit of confirmation on these to potentially pull the trigger. So let's just go take a look at those. Euro Aussie, as far as a short goes. Okay, here's our daily chart, lower lows, lower highs. And when we're looking at this on a daily, it's not really the best looking example of a daily supply. Now, we did kind of bounce into this 4-hour demand zone from back here, created back here in the middle of last year. Okay, we're talking May, literally right down the middle. Well, a little bit earlier than the middle point, I guess, May 15th. But we've got a zone there. Now, it's already been touched. Let me just flip it down to a 4-hour real quick. Okay, so just going back in time, we're keeping an eye on this zone here, right here. So that's a 4-hour demand zone that had barely touched that weekly demand zone. Okay, weekly demand zone. So it's already been mitigated. I don't know how worried I am about it. Here, I just went to a weekly chart just to show. Okay, here's our weekly demand zone, and this one was created back in late March. Really strong leg out candle when we're talking about the week after, or the week after, the last week of the month of March, basically. I mean, that's just about as strong as it gets, guys. So it pushed up, and it just done nothing but went sideways for the rest of the year, okay, / beginning part of this year. So that's a weekly time frame. And then we drop it down to a daily, and we haven't even touched it yet. The daily is way down here. Okay. So we haven't touched it, but in the looking at the daily time frame, we do have, if I zoom in just a little bit, we have got this kind of daily supply. It's not the best looking zone because it really didn't move that far. Let me just color that yellow. So that's your daily, but this is a little hesitation on my part because if we look at the range of that, it's 77 pips. And if we measure down how far it only went 79. So it only moved 1 to 1. Okay, 1 unit of reward to 1 unit of risk. So I don't know that I really want to be looking at this in the context of my normal daily 4-hour confluence because the daily itself only moved 1 unit. So it didn't really show me that higher time frame strength, that higher time frame move away from the zone itself. So, but it is a zone nevertheless because it did it create a gap? Oh, it did. Oh no. Oh, okay. Well, I guess, yeah, you know what? I guess it did touch. So yeah, I really can't use it because you can see it just wicked in, barely touched it. All it takes is just that little tiny bit. Okay, a couple pipettes in and it's mitigated. So yeah, I really can't look at this on a daily. So instead of daily 4-hour, I have to go down to like a 4-hour, 1 hour to see if we can qualify anything. So let's go down to a 4-hour, and I'm going to delete the daily since I already know it's been mitigated right here. Okay. On the 4-hour, we're looking at this candle here with our gap. Okay, nice strong gap coming out. The volume could have been better, but it did increase this a slight amount. This is also banging into a former support resistance line, which is that blue dash line right there. Scroll all the way back. Okay, we're talking about way back here. Okay, way back here. It kind of do-si-doed around it in this area here. This is May. Okay. And we come back to present times on the 4-hour. Again, on a 4-hour chart, we got 3 red candles coming out. Now, it did not break this structure down here, right? So that's another -1. Okay. So we didn't get the daily supply zone because it's already been touched and it didn't move away 3 units. Okay, it only moved 1. So that's a -1 on daily. This is a -1 also on the 4-hour because it did not break a structure. What kind of potential reward to risk am I going to get? Well, I have to look at this as my 4-hour demand zone. Okay, have to look at that. So let's do a little measurement here. Okay. Am I going to get 3 units? Not looking very good, right? So that's 37 pips range. And then if I go to the proximal line of that zone there, that's 66. So that's just under a 2 to 1. So is it a 3 to 1? It's not. So now that I look a little deeper into this, now I realize it's not worth it because it's not paying me. If we measure to the push away, 4812, that's 3 to 1. Okay, that's 3 to 1. But it did not break a structure. And when we are looking at opposing demand zones, the opposing demand zone is only 2 units away. Two ranges. So the range is obviously the width of the supply zone itself, right? I have to get at least 3 units to the nearest support, the nearest zone, whichever one comes first. In this case, it's the demand zone. So I can't look at it on a 4-hour either because it's too close. This isn't paying me. So now that I dig a little deeper, okay, I did that in real time with you because I saw that at first when I woke up thinking, oh, that might be a good spot. But yeah, now that I dig a little deeper, it's not paying me, so it's not worth it. Okay. So we're going to skip that and go on to the next one. Just for kicks, I want to drop it to a 1-hour just to see what we got. Okay, 1 hour. Here's my 1-hour supply zone here. Down here on the demand zone, there's my 1-hour demand, talking about this red indecision candle. So the picture probably looks a little better on the 1-hour. Okay, that's 16 pips all the way to 15, 30, 45, 60, 70. So it's about a 5 to 1, but I don't have the benefit of a higher time frame confluence. So, because of that, I don't want to be getting involved with that. I really don't. The pictures changed. Wow. And speaking of, my alert has hit on the other currency pair I was just teasing about just a minute ago. So this is Aussie Swiss. Let's take a look at Aussie Swiss. So keep in mind, Aussie Swiss is a bullish 6. Okay, bullish 6. And looking at the daily over here. Okay. So the daily picture is similar. I'm not getting that 3-to-1 movement, right? This is 1 unit of the range of the zone. It's about 1 unit away. So this is kind of a similar picture. So I can't use the daily. I have to go to the 4-hour. On the 4-hour, okay. And now the 4-hour demand is inside of the daily, so that is nice. But again, I just didn't get that strong push away. But what's the picture look like on a 4-hour? Well, this clearly is going to be over a 3-to-1. If I measure the range of the demand zone, that's 12 pips, 12 and a half, we'll call it. 12, 24, 36, 48, 6, almost a 5-to-1. What about opposing supply zone? It'll be right there. See, that zone wasn't there last night when I was looking. But look how strong it dropped in. That's a high momentum move. So that's only 12, 24. Yeah, that's 2-to-1. So this is kind of similar to the other one we just looked at. Now, the one thing I like about this one, though, is the fact that we got all this liquidity down here, all these stop losses, which it chewed through. So all these people that bought here, bought here, bought here, bought here, bought here, okay, where do they put their stop losses? Down in this area somewhere, right? At the upper end of the daily, but at the beginning of the 4-hour as well. And again, we don't know how wide this liquidity zone is, right? But the thing is, it dropped it right in the middle of that 4-hour demand. Volume started to grow, so it didn't look the greatest though. But at least this 4-hour pushed away pretty decent. Now, I did bounce into this overhead supply zone from back in the past. It also broke through that former support and resistance line, that blue dash line you see. So those are, and not to mention however many green candles in a row that was, 6, 7, something like that. So this is one that I'm kind of considering taking a position in because it is one of the stronger ones. Okay, again, it's a +6. Let me refresh my screen over here, make sure everything's looking good. Okay, perfect. So, yeah, I'm considering this one. I'm really strongly debating this one as a potential buy. Now, going down to a smaller time frame, just to kind of fine tune it a little bit, what I was seeing on this was the fact that we kind of had this downtrend line going on here. So I was basically waiting for a break of it, but also a break of this structure right about here. Okay. Kind of a break of structure, kind of showing that it's trying to turn around, right? Because I kind of had a temporary support in this area here, but then we broke and closed it. So at this point, all I still see, even on a smaller time frame, is lower lows and lower highs. So at this point, I'm really just going to kind of wait for a movement kind of like this. If we take our, something like this, break through these structure points and then a retracement, and then we might have a trade on our hands. But I don't know that I want to get in just yet because, again, even on a smaller time frame, 15-minute time frame, we're still getting lower lows and lower highs, right? What's a 5-minute look like? Does 5-minute give me a demand zone at all? Now, if this price action kind of follows this trajectory that I kind of drew up, breaks these highs, and this is a 5-minute now. So we break this structure, close, break this structure, close, and hell, even break this structure and close. Then at that point, I'd probably look at this candle here as a demand zone. Right here. This would be a 5-minute demand zone, right? Where I kind of drew that up. So that's kind of what I'm looking at. If I get into a trade now, I feel like it's front running it a little too quick. But if we start breaking these structures and then retrace, then it's game on. Because that's price action saying, hey, we're breaking structures. We're trying to turn it around because the fundamentals and the sentiment are heavily or much more in favor, I should say, of the Aussie dollar versus the Swissy franc. So I'm going to sit on my hands for now. But what I think I'm going to do is set an alert at the top of the daily demand, which is also pretty much this high point, this little swing high. I want to set an alert right here so that I can kind of watch price action retrace, hopefully get a retrace. So look, sometimes when I'm watching a zone, I may put on 2, 3, 4 different alerts just because I want to see certain things happen. I want to see wicks. I want to see breaks of structure. I want to see retracements to new demand zones. So, I may, just to get into one trade, I may use an alert, like I said, 2, 3, 4 times, just depends. So my initial alert was just simply, hey, we come down to the daily zone. Hey, we come down to the 4-hour zone. But now I want to get an alert after it comes out. So that I can look at the newly formed demand zone. This is a little complex, but this is just how I do it. You don't have to do it the way I do. I just do it this way because I want price to do what I want it to do in order for my trade plan to work out, right? I have to see this. So if we break this structure here, it's going to let me know. And then once we get up here, then I'll set an alert down here on this newly formed demand zone. And at that point, I'm just waiting for a retracement down to touch it, and then we're game on. So 1 alert, 2 alert, this would be a 3rd alert. Okay. I use the hell out of my alerts because, again, I don't want to chase price. I want price to come to me. I want price to jump through my set of hoops. If it jumps through my set of hoops, great. If not, no big deal. Then it just doesn't follow my trade plan that I kind of came up with. So that's Aussie Swiss. Nothing to do now except just wait and see if we get my alert hit. When we get the alert hit, we come back and we reevaluate this, hopefully newly formed impulse leg with this demand zone. Let's look at some of my alerts because I did have some alerts hit. Now I haven't pulled any triggers on any of these, but let's delete that because I've already got. Well, actually, Aussie Swiss, I'll just delete that because we just set a new alert, right? So these are alerts that have hit. Now, the Euro Aussie is the one that we just looked at up here. And it's kind of a similar thing. Okay, so this does look a little bit better, but again, we got that demand zone just too close down here. I really would like to get in this trade because what happened? When price entered, what did we do? We broke a structure. Broke a structure right there. This is a smaller time frame. It's a 5-minute. So we broke that structure. Now, normally I would just wait for the retracement back to this supply zone like it did and then look at shorting it. But again, it was just too close. Again, we're talking about this 4-hour demand zone. It's too close. This 4-hour demand zone broke this structure right here, did it not? So I just don't want to get into a trade on this thing. I really want to, but because it's basically followed most of my rules. Except the one thing is the push back into the zone. I mean, it came in hot and heavy. We had a lot of trading activity. I mean, that thing was just parabolic. So do I want to get in the way of a rocket ship? Probably not. I prefer, if price is going to come into my zone, I prefer that it comes in a little bit lazier. Come in at a little bit better of an angle like this, not just straight the hell up like this. I want it to come in a little bit lazier. That way it doesn't take a whole lot of unfilled orders to potentially move it back down. So, if the retracement leg is stronger than the leg out, like it is, because this is one 4-hour candle coming back into the zone. The leg out was 1, 2, 3 candles. Okay. So in order for me to be excited about shorting, then I need my movement in to be more than 3 candles. Okay. It's the impulse leg out, the leg out of the contraction where I'm looking at a zone. It has to be stronger than the retracement back in. But in this case, we didn't get that. We just got a W, right? Is that not a W? A little bit of a W pattern? Okay, looking at this right here, it's a W. So this is a trade plan all on its own for a lot of people, breaking this structure right here and buying. I just don't want to get involved in it mainly because the leg itself was just coming in too hot. It looks great. It looks great from a break of structure, but perhaps that's why when we broke this structure, perhaps that's why this zone didn't work out. So now, if we get a little bit more time where it's just getting kind of lazy where it's at now, okay, if we get some type of movement like this where it's just, the zone is proving that it is strong enough to slow this thing down. Maybe here in another couple hours or so, I might look at something like this where we take a short. But again, even with doing that, we still don't get a ton of profit margin. So I think there's probably going to be better trades. It looked nice initially, but yeah, the more I dig into it, the more I don't like it. Pound Swiss. Let's see. What did Pound Swiss? Pound Swiss. Yeah, that one's not even on my list. So I think this is an alert that hit that I put on when we had where's Pound Swiss? When we had it on the list. Yeah, see, Pound Swiss is a neutral one. So yeah, not even interested at all about any of these zones here. Might as well delete them. Delete. I put in a lot of alerts whenever they give me a bullish or bearish bias. But obviously, this list is so dynamic, things change left and right? So oftentimes, I'll get an alert hit on a asset that's moved back to neutral territory. Just simply skip it, simply delete it. So that was Pound Swiss, so we'll delete that. We'll delete the Euro Aussie, which we already looked at. Dollar Swiss is giving me a bullish signal, but I don't really like any of these zones. So this is a daily. Now, in the context of the higher time frame, we're in a much higher time frame demand zone from monthly chart. Okay, this is a monthly chart. Now, we've been in this zone for a while. 2011, guys, August of 2011. That's this box down here. This candle, that green candle. Oh, I got to plug in my. I just realized I didn't plug in my battery. Give me a second. I got to plug in my battery, guys. Give me 2 seconds. Two seconds. All right. There we go. Yeah, I take my laptop into my living room periodically to put something onto the TV with my HDMI cord. Last night, obviously, was the college football championship here in the U.S. University of Miami versus Indiana. Not Indiana. Indiana. The Indiana Hoosiers. Indiana Hoosiers had a undefeated season. So they went 15-0 the regular season, and then they won the championship last night. So I don't know. It's got to be the first time in years that a team's went completely undefeated in college football. So it was a pretty fun game, though. Indiana did win it on an interception to seal it at the very end. So then I brought my laptop back here into my room and just forgot to plug in my battery. So anyway, back to dollar, which as you can see, we've been in, I just moved it out of the way, but we've been in this demand zone since April, okay? Since Liberation Month, right? April of 2025. So it's kind of bounced in. And at the same time, it bounced into a weekly demand, which is going to be this box here. Okay, so this is a weekly demand. And as you can see, the weekly demand is just kind of stopping in its tracks. So look how hot and heavy it came in. But then once it hit the weekly demand, which if I just go down to a weekly time frame, okay, coming into this weekly demand, again, this rectangle here, that's where it's kind of slowed it down and stopped it. It's just been going sideways ever since. Okay. So that's weekly. And then you drop it to a daily. And you can see I had a demand zone here, which bounced a couple times. And this daily demand has just kind of stopped it in its tracks. I mean, I could move it all the way forward, but I always just kind of keep it out of the way, leave it a light, leave it a light yellow, just saying, hey, back in time, this stopped the price in its tracks. And then after that, we had another daily demand kind of form, which bounced once, bounced twice, bounced thrice, and now it's bouncing a fourth time. So each time price comes back to a zone, just remember, guys, each time it does that, it's taken away more unfilled orders. So I don't like the idea of using a zone, no matter how high or low the time frame is, really more than once or twice. I'm a little more lenient on the higher time frames, maybe twice, but the smaller time frames, absolutely not. One time, bounce into one time, and I'm done with it. I'm over you. But sometimes on the higher time frames, as long as it just barely bounces in, as long as it stays above the 50% of the range, then perhaps I'll look at it a second time if it goes a little deeper. Because oftentimes you can find some smaller time frame demand zones within the bottom part of that range that are pretty strong. So in this case, we had that. We had a 4-hour, which is all the way down here at the bottom, and it hasn't been touched yet. So let's just go back in time here just a minute. And we're taking a look now at this. So that's not even a 4-hour. But look at the volume spread analysis can down here. Okay, that's a lot of trading activity. A lot. And not to mention the 4-hour time frame, you had the big strong rejection. I mean, think about it. The shorts brought price all the way down here, and the bulls said, "Oh, hell no, we're pushing it back up." So just for kicks, I want to go down to a 1-hour and see what price looked like. See if that's where my demand was. I don't remember the history of this zone. I have to look again. See, even on a 1-hour, it's still just a wick. So yeah, I looked at that on, I don't know what it was, 30, 15. I don't want to go back through all the time frames, but the idea is the bulls really stepped in hardcore down here. So if they stepping in hardcore, then if they're stepping in hardcore, then I want to definitely pay attention if and when it comes back. So it's a long ways away. For a minute, I was kind of keeping an eye on this as a potential demand, but you can see just chewed right through. I just never got my trigger candle, so I stayed safe, stayed out of it. And it's coming at this point. Dollar Swiss is just dropping hot and heavy. So do I really want to try catching a falling knife? Probably not. In this area, yes, because we were getting higher highs and higher lows. But even though it's giving me a bullish bias on the edge finder, we've broken this structure to the downside, this structure. So at this point, I need it to kind of stop wherever it wants to stop and spin back up and give me some higher highs and higher lows on a 4-hour time frame. So I'm not interested in dollar Swiss at the moment because of that. And I'm also not interested in really anywhere down here because that price area has been touched quite a few times going back through the history of it. So, and it's sideways. This is just nothing but, if you look at this on a higher time frame, it's just nothing but one big chop fest. If I turn my drawings off and turn on my master pattern indicator, you're going to see we got orange boxes. Anytime you see an orange box, when we're talking the master pattern indicator, that's just one big giant contraction point. In other words, chop city, retail chop zone. Right? So the idea with these contraction points is wait till price leaves that contraction box. Wait till it leaves, and then we look to latch on after it does so in that direction. Right. So back here, okay, we break and close. Okay, that's a momentum to the downside, and then look what happens. Price just continues for a few weeks there. What happens over here on this contraction? Okay, we break and close, and then we have a further push up. What happens over here on this contraction? Okay, break down and just pushes down. Same thing over here. Break down and it pushes down. So over here, that's the same thing. Now, this being a bullish signal, my preference is that it breaks to the upside and closes. Okay? If it breaks to the upside, then that's where I would be looking for higher highs and higher lows on a daily, on a 4-hour, and then try to find a demand zone for a retracement and latch on then. But when it's inside of this big contraction box, I'm just not that interested. And then going down to a daily, okay, if you're looking at the contraction boxes down here, then ideally I'd like to be, if I'm trying to buy this market, I'd like to be above these boxes as well. So if I'm buying down here, I'm buying in a bearish push out. And you don't really even have to have this bearish or this master pattern indicator. All you just do is just go look for contraction points. It's best to do it on higher time frames, because the minute you leave those contraction boxes, then you can typically jump into some pretty good, swing trades in that direction. So let me get caught up on the chat. Sorry about that, guys. Let's see here. Jeremy. Hey, Tiger, any idea why Euro Swiss dumped as Euro is dumping on all the other currencies? Euro Swiss. Is that one we just looked at? Euro Swiss. Go back over here. Let's turn that off. Let's turn my drawings back on. Dumping. I guess you're, yeah, it looks like London had other ideas, right? London came in 2:00 a.m. my time. That's the start of the orange box. Okay. That's my sessions indicator. So let's just go down to a 5. Okay. London open. Just push down. It looked like we just had a little bit of a strong push at the end of the Asia session. I wouldn't say that's a dump. I mean, especially if we look at this on a little bit higher time frame. I mean, we have dumps like that quite often. There's another one back here. But as far as the euro goes, I mean, that very well could be part of, a little bit of anticipation on Governor Bailey's lip flapping session. Oh yeah, that's why. So they had a higher number. The British pound did. Now it kind of, has an indirect effect on the euro, but you had a higher number of unemployment claims. Okay, that very well could have been part of it. It's for the pound, but again, they kind of have an indirect relationship, right? The pound and the eurozone. So they forecasted 15,500 unemployment claims. They call it claimant count change. It's just their way of referring to it. But they actually had over 2,000 more than expected. So when that came out, then that's obviously bearish for the pound and kind of indirectly bearish on the eurozone as well. And we're probably going to have some pretty decent volatility with these World Economic Forum meetings going on as well. So that's just something to be aware of. The euro also had a much lighter number at 3 a.m. On their current account. So this is kind of like it says here, difference in value between imported, exported goods, services, income flows, unilateral transfers during the previous month. Actual number is, if greater, then it's good for the currency, but this was much lighter. So they had a forecasted 20.3 billion, only got 8.6. So that's quite the miss on the eurozone. It's a light impact. It's a yellow folder event, but kind of that coupled with the British pound claimant change number being higher than expected, Governor Bailey flapping his lips, combination of that's what it looks like to me. As far as the Euro Swiss, though, yeah, it's still giving me kind of a bearish or a kind of a neutral look. So I'm not really excited about trying to trade it right now. But I will say, if we get a drop on Euro Swiss a little bit deeper, if we get a gap down. Oh, and also, guys, with President Trump talking about his 10% tariffs for the hostile takeover of Greenland, remember, the Eurozone did kind of push back with their own version of their tariff bazooka, their secret weapon, as they're calling it now, like $100-something billion tariff package. So anytime you're talking that, the U.S. stock market, the euro, the currencies, everything just took a hit yesterday. Dollar was down. The stock markets were down. Cryptos were down. Gold and silver were up because, as always, gold and silver thrives on chaos, right? So yeah, just kind of everything took a hit. A lot of, a lot of, what measuring contests with the tariffs. So, let's see here. Thedo says New Zealand yen, Aussie yen, Euro yen, all the yens. You went long all of them? Okay. I can't hate you for that. Let's go take a look over here. New Zealand yen is tied with the most bullish signal. New Zealand yen. We'll take a look at that here in a second. Aussie yen, Euro yen. Yeah, Aussie and Euro yen are still a little bit more on the neutral side, but let's take a look at New Zealand yen. I haven't looked at that one yet. New Zealand yen, New Zealand yen. You're going to be down here. This is a beautiful, beautiful picture, guys, when we're talking technicals. So I already know it's the most bullish asset on the Edge Finder when we're talking sentiment and fundamental analysis. So now I just need to find technical analysis look. Higher highs, higher lows on a daily. You see these dark boxes over here. That's former supply zones, a former daily and a former, wait, is that daily or weekly? No, that was a weekly. So we had a former weekly supply. Talk about this red candle here, right there, because we had a gap under it. And then we also, if I drop down to a daily, had a daily supply. There's a daily supply, this candle here. What happened? Well, we came up into it, chewed through it, and didn't really get a whole lot of rejection. But we come in Sunday here in the States when the currency market opens. Sunday evening, 4 p.m. my time. And I was looking, and I'm a little annoyed at this one. So good on you to get into this long. What I was looking at was this daily demand here. Because within this daily demand, we had two demand zones, okay, two smaller time frames. So there's my 4 hour, and then down here was a 1 hour. You see where I have my alert. Look at this. Look at this crap. It dropped in and touched the daily, and that's where it took off. So it gapped down. It gapped into the daily, and it just missed. Look at that. It just missed my alert by like a pip or two. See, I was going for this 4 hour, this 4 hour demand. If we'd have been in that, if we'd have dropped like three more pips, I'd be in this thing too. And then what happened? I was cussing this thing up and down. Are you freaking kidding me? Because it's went off. It's just taken off. Okay. Annoyed as hell that I missed that move. That's what I was looking at. Attaboy, though, Thedo. Good job. Good job. I should be in it with you, my friend. I should. But the trading gods were just looking at me laughing. Oh, you're going for that price? No, because the trading gods are always going against us, right? That's what we all say. So that was my weekly, the trading gods hate me setup. But yeah, it's out of my hands now. You're making money. I'm sitting on the sidelines watching. So, but hey, the cool thing with this impulse leg is, number one, it broke a structure over here. So it's showing that it was a good one. So now hey, is there another opportunity? Is there a second chance opportunity for me? Let's go to a daily real quick. Now it gapped down. So I don't really know that I like the fact that the candle before, so the Friday candle, it didn't come down. It basically was just hiding up here. So I don't really know that I want to look at this in the aspect of a daily. Number one, this down here is still in play. But this has now become my favorite impulse move. So I need to look at this on a 4 hour. What do I got on a 4 hour? Do I have any decent demand zones down here? Now, the origin of it is down here. I don't know. I mean, if I drew up the 4 hour zone, it would be like this at the origin of that strong move up, obviously. Yeah, Thedo, good stuff, man. Yeah, it's all about the COT. Yeah, seasonality. It's good to look at a whole bunch of things. That's why I love the Edge Finder, man. It's got my COT report there. It's got our seasonality here. Okay. Technicals is basically looking at the daily 4 hour. That's basically what the trend indicator is. And it's also looking at a moving average crossover. I don't know all the math behind the way this thing is designed, but I think they use like the 4-hour or 4-period, 12-period or something crossovers. I'm not exactly sure what it is, but yeah, that's the idea, man. Fundamental analysis, which is these three markets here, or these three items: the economic growth, consumer strength, inflation, jobs market. But yeah, New Zealand yen, it's getting 1, 2, 3, 4, 5, 6 points of strength on the fundamental analysis alone. And then you got the retail crowd. So the average retail trader on their smartphone, on their home laptop, hey, they're net short this asset, New Zealand yen. Combination of that, net short. So we like to look at that as a contrarian signal. If the crowd's going short, I want to be going long because the average trader loses money, unfortunately, right? Seasonality, it's not really getting the greatest score. It is giving us a -1, but trend is good. Let's go look at seasonality on New Zealand yen. Let's go over here. Let's see here. I need to go to my technical scanners. Seasonality, monthly, New Zealand yen. Let's see what it looks like over here. Oh, we're over here. Okay. Yeah, see, this is why. So historically, if we're looking at 10-year averages, New Zealand yen has on average been minus 0.93% down. So that's why we're getting a little bit more of a bearish seasonality score. But remember, that's only one item. Just like the COT is only one item. Okay, COT is giving us kind of neutral score. I mean, we could go look at that as well real quick. Sentiment analysis, latest COT report. New Zealand yen, right? So on New Zealand yen, the yen is giving us, so the yen was sold off a crap load last week. They had a weekly net change of 10% more shorts. So they did that with a combination of closing 28,000 long contracts, but opening up 25,000 short contracts. So by doing that, they actually went from net long to net short on the yen. And is that any surprise now that we're talking intervention? That right there should be one of your first key indicators saying, hey, intervention is drawing nigh, right? Interest rate divergence, yeah. So when I saw that, that's when I realized, oh yeah, the banks know what's up. Okay, the banks of the world, the financial institutions of the world, if they are 10%, a whole 10% net short from week to week, they know what's up. They know the Bank of Japan's about to be playing some craziness, right? So anyway, yeah. New Zealand yen. Now, New Zealand itself, the New Zealand dollar was also net short on the week by 4.5%. So that's why we're not really getting a great score. We're getting a good score on the fact that the yen is net short, but so was the New Zealand dollar. And in fact, the New Zealand dollar is way more net short when we're talking the big banks and financial institutions. They're way more net short than the yen. So that's why we're kind of getting a neutral rating on the COT report, at least for this week, is because of that. Okay, this is the intro week. This is the week to week. This is all I care about when it comes to COT. I don't personally care about the overall, okay, which is this top. This is what position traders want to see, long-term position traders. Okay, gold, silver. Clearly, the big banks clearly net long this. Gold and silver has just been going to the moon for the last X amount of years, right? So, and then and New Zealand dollar happens to be the most net short. So that's why we're not getting a good score on the COT. But that's just one thing. That's only one item on the top setups, right? But when we look at the fundamentals, that's giving us a pretty good reason to be long. So literally, it's just the seasonality is the only downfall. But we add everything up, we get a +8 score. 5 or higher is a bullish. 9 or higher is very bullish. So it's almost to the very bullish camp. Same is true in reverse. -5 or lower is bearish. -9 or lower is very bearish. -5 or lower is bearish. Yeah, making sure I said that right. So anyway, yeah, the more I look at this, the more I want to take my laptop and skip it across my pond outside since I missed it. But that's just the way the cookie crumbles. Now, we do have this former resistance point over here. So part of me, I was looking at this. Okay, got this swing high that's going right through this indecision candle right here. Part of me is looking at this candle. I got to be honest with you. Okay, this doji indecision candle, which is where contraction points are often. So if I look at this on a 4-hour, do I have anything on a 1-hour? I like to do everything by multipliers or divisors of 4. Okay. So if I look at a 4-hour, I want to go down to a 1-hour. 4 divided by 4 is 1, right? Go down to a 1-hour to see if I get my gaps down here. And going down to here, I didn't really have a gap at all. I don't have a great gap. I have a gap above the zone, but not in the zone. Because all these candles over here overlap, whether it's the real body, whether it's the wicks, all these candles are overlapping the candles to the left and to the right. 2 candles over. So that's an efficient looking price structure to me. I care about inefficiencies because the banks care about inefficiencies in the market and demand zones, which is what I like to trade. Give me 1 second, guys. Get the chart back up here. Okay. So yeah, inefficiencies. That's what banks like to attack. There is an inefficiency right here, but it's not in my demand zone. On the higher time frame demand zone. See, I want it to be in the higher time frame, but it's not. And as you can see what happened, price came down and has already closed that, but it has yet to come inside of the higher time frame. I care about the higher time frame zones. If I'm looking at inefficiencies on a lower time frame, it's got to be inside of the higher time frame zone. So it's not there. Now that's a 1-hour. What about a 30-minute? Yeah, I mean, you could look at this as an inefficiency, but the thing is, and why this is kind of a turnoff of a zone is because the volume out, the leg out, the volume kind of dies off, does it not? Okay, the volume spread analysis, the trading activity. It was great here. Okay, this is kind of the early mid part of the Asian session last night. So it was pretty decent volume, even though it was in the Asian session. Now, it makes sense. I mean, New Zealand yen, okay, that's obviously over there in the Asia geographic zone, right? So it looked nice from a volume perspective, but it did not really create much of an inefficiency. And when it did create the inefficiency here, the volume died. So as I dig a little deeper, I'm not too excited about it. Not too excited about it at all. So yeah, I'm just going to basically leave my same alert on here. Yeah, I don't think I'm going to do much. I was considering putting an alert up here. I'll probably just do that just to see what happens if and when it comes back to this gap down zone that it kind of created. Because basically there is kind of ugly. There's kind of a gap there. Okay, the gap would be basically the top of that wick to the bottom of that wick. So that's your fair value gap. It's not really that strong though. I'm probably going to ignore it, but I would like to see what happens if and when it returns. Same thing. The volume kind of died. Okay, so I'm just going to pout in the corner over spilled milk over the fact it missed my alert by a whole whopping pip or two, and we'll just go on to the next asset. Oh yeah, I need to check something real quick, fellas. Give me just 1 second over here. Okay. So what else we got? You guys got any other things you'd like me to look at? Oh, that's right. You did mention Aussie yen, Euro yen. Yeah, let's take a look at those two real quick, just from a technical level. I already know that they're fundamentally in sentiment not a great thing to trade for my trading style. Aussie yen, though, just in looking at this thing, I would just be careful if I were you. Get rid of that because we are bouncing into these higher time frame supply zones. So right here is a daily supply. So I would just be careful with that. Okay. We're pretty expensive. We're at a pretty expensive spot. If I go to a weekly time frame, there's our weekly supply, which we've bounced into. Let me zoom in. Yeah, we just barely wicked into it. Daily supply, which is kind of half in and half out of that weekly. Let's go take a look at what the daily candle looks like. So just remember that this candle, okay, and there's another daily supply a little higher. So it really just kind of depends on what part of this weekly supply wants to, catch the movement downward. But we had just a gigantic drop. Gigantic drop. Let's see here. That'd be the July of 2025. 2024, I'm sorry. July of 2024. So we had a couple supply zones just keep an eye on. It's in this one here. So that's why, yeah, me personally, it wouldn't fit my trading style because I want to be buying low on the curve and selling high on the curve, if anything. So if I draw up my curve analysis, which I use a fib-based, a trend-based fib extension, and I break it down into thirds, and I go from swing low to swing high. Okay, so it breaks it into thirds. The retail chop area tends to be. Okay, traders get chopped up. I'm high on the curve, which we are. This is where I only really want to be selling. So I'd be wanting to look for breaks of structures downward from a technical perspective, and then retracing supply zones to short. I would only want to buy if we're down here. So like down here, I got a daily and a 4-hour confluence. That would be where I'd want to buy only if it gives a discount. If I buy up here a nice jacket or whatever, do you want to pay full retail value up here? Or do you want to wait a couple weeks till it goes on discount? Okay, maybe they're having a clearance sale or whatever the case is. So that the way you buy and sell markets, assets should be the way you buy or sell anything in life. I don't want to pay full retail price. I want to wait for those crab legs to go on sale, right? I want to wait for that $250 jacket to go down to $150, right? It's just kind of the way to look at it. My chart's gone again. Okay, give me 1 second. I got an alert going on. Alert, alert, alert. EuroCAD. Looks like more EuroCAD. So let's see what EuroCAD is doing. But good luck on that one. Okay. I don't want to discourage you. Your trading rules may be different than mine. So as long as you're following the trade plan, man, good luck on that. EuroCAD is, neutral. So this one's not giving me. So this is another alert that I had set that is no longer. So see, it's neutral -3. So it's got to be -5 or lower for me to get excited about trying to short something. But this is only -3. Technicals is actually just a little on the bullish side. Sentiment is -1. Fundamentals -3. So -3 and -1 is -4. But then when you add the positive point for the positive technicals, that takes it to a -3. Okay. This is just kind of the simplified version. I use the simplified setups for my neutrals just so I can flip over to it real quick without having to adjust all my settings. So just going back over here, we'll still take a look at it though. See what I was looking at. A daily time frame. We're looking at this daily supply. So let's take the drawings away for a second. Looking at this red candle right here. Okay, there's my daily supply zone. Now I got to say it's in the middle of a big gigantic chop zone. If I go out to a weekly, And I'm sure if I turn on my master pattern indicator on a daily, yeah. The midpoint, yeah, the midpoint's a pretty decent spot. So here's the thing: when I get a supply zone, or when I get a contraction box, these things often, well, number one, they act as magnets. Okay, supply zones do, demand zones as well. But when we're looking at contraction points, the 50% or the midline is often a pretty decent support or resistance line as well. Just so happens it's going through this supply zone. If I turn my drawings back on, okay, that supply zone. So remember, this kind of dot, it's kind of hard to see, but it's a dotted line coming out from the midpoint of this contraction box right through that daily supply. So let's drop to a 4 hour, okay, because on a 4 hour, which we're currently in the bottom one, okay, 4 hour supply right here, big gap out. I mean, that's nice. But we also have another supply inside, just a little higher. So it's kind of a zone on top of a zone. So that is kind of another, odds enhancer, if you will. I got two zones inside of the higher time frame zone. That's really nice. And on a 4 hour time frame, the master pattern indicator, the contraction box, is giving me another 50% line that's right at the proximal line of the supply zone of the daily and the 4 hour. So technically, this is an awesome looking setup. And you got some liquidity up here from these shorts. Okay, there's stop losses up here from these people that shorted. There's liquidity up here as well from these shorts that pushed price down. This is some old box I need to get rid of now that I know we've broken through that. But so technically, this is a hell of a freaking short opportunity. It's just a bummer that it's not giving me let me just flip this over to neutral for a second. It's just a bummer that it's not giving me a bearish score. Again, we're looking at Euro Aussie. So let's just do this. Okay, Euro Aussie. Where are you at, Euro Aussie? Where did you go? Where's my Euro Aussie? It's not on there. Did it go to bullish? Or, I mean, bearish? Did it change? Maybe it changed. Oh, it's a minus 5. Oh, I'm sorry, guys. I'm looking for Euro CAD. What a dummy. What a dummy. Okay. I want to look for Euro CAD. Okay, right here. Jeez. So Euro CAD, again, -3. So the trend is up. Okay, when we're looking at the trend. That's why it's given a bullish, I don't want to go against the trend, right? I don't want to go counter trend on a higher time frame. I want to go with the trend on a higher time frame. So that's part of the reason it's, not giving me a bearish signal. Now, seasonality, the COT report, okay, those are all favoring the Canada dollar over the euro. Now, the Canada dollar is the new strongest currency, right? But the euro's decent. It's about 57, 58%. So it's no slouch. We look at the crowd sentiment. Okay. So the crowd is net short. Right? That's why we have a positive number. So I don't want to go with the crowd because the crowd is normally wrong, unfortunately, right? GDP. So there you go. I mean, you got some good reasons to short due to the PMI data and inflation numbers, but that's about it. That's about it. But man, does that not look like a good technical score? And it very well could, it very well could drop on us. 1 hour. You see that white dash line? Okay, that's another smaller time frame supply. If I go back here, I'll show you from a technical perspective. We're looking at that candle right there. Okay. With a gap. So I got a daily, I've got a 4 hour, and I've got a 1 hour supply zone in confluence with each other with strong gaps below. So that's a pretty good technical setup. I just don't want to break my rules and short this because if I do, then I'll be breaking my rules. I have to have a strong fundamental and sentiment reason to hop in this trade. But even so, look what happened. Look what happened. We just wicked in beautifully wicked in right through that 1 hour, as you can see, and just slammed the door shut the other way. So this very well could work out. And if it does, c'est la vie. Right? If it does, c'est la vie. Because you see how strong these zones are. Let me get rid of the drawing for a second. Look at that wick. This is a 1 minute time frame. Now, I don't want to make a rational decision on a 1 minute time frame. That's too small of a time frame. But it just goes to show you the power of confluence. Now, it may very well turn around and go back up. But the point is, you typically always get strong reactions with good confluences, regardless of what the fundamentals and the sentiment tell you. Okay, you typically always get a strong reaction. That's exactly what we got. It's no surprise. It's no surprise when we're talking about the, 3 time frames lining up all at once: supply zones plus fair value gaps. Guys, I got about 19 minutes. So if you have any other items, let me know. I do want to let you know that I was very temporarily yesterday in a Bitcoin long until I realized that I probably got in a stupid trade because of the tariff threats and everything. It basically was a risk off vibe, risk off, right? When they started throwing around the tariffs, the hostile takeover of Greenland. Like I said earlier at the outset of the show, it kind of became risk off real quick because stocks went down, dollar as well, but the metals went up. So gold and silver, right? So before I really dug too deep into the analysis, I got into this Bitcoin position because it was given a bullish signal for like 1 day over here on the top setups. But it didn't last long at all. It lasted just the 1 day until everything kind of came out with the tariffs. So, but just going back in time, I was looking at this thing on a daily because obviously we had a very big sell-off, right? Ever since, what was that, like early October-ish? Yeah, big sell-off. So there ain't no way I wanted to step into a buy position in this area because I kept getting lower lows and lower highs. Now I was basically watching kind of this leg here on a smaller time frame, 4 hour. This was kind of a little bit of an impulse leg down, looking at this red area here. Now we did finally come up and make some new highs, kind of wick through, but didn't have any strong closes through until we got over here. Looking on a 4 hour time frame, we finally started making higher highs and higher lows. So what I ended up doing was getting in off this daily demand because we had a zone on top of a zone inside. We had a 4 hour zone here with a gap, right? And a white line, meaning 1 hour demand zone as well with a gap. So I got into this trade here. The volume spread analysis was looking great. Okay? It's a lot of trading activity. You had 3 expanded range candles in a row come out that broke a structure, that broke and closed on the other side of a higher time frame support resistance line, meaning the blue dash line. I had all the reasons in the world to get into this trade. I followed every one of my rules. Okay. I had all my odds enhancers in my favor. And then geopolitics happened, right? Geopolitics. So I got in here, and as I dug deeper, I'll tell you, I had my stop loss. Okay. I had my stop loss here initially because I was kind of hugging this demand. I wasn't taking into account the whole daily demand, which is obviously a more conservative demand, a more conservative stop loss placement. I was going for an aggressive one because everything just lined up and looked beautiful. So that's why I put my stop loss here. Up in this area, though, let me turn off my contraction boxes. So up in this area, that's when I realized that this thing's probably going to continue going down. Okay, talking about the currency, the cryptos, Bitcoin, Ethereum, whatever. So when I kind of did my analysis on that, I realized real quick I wanted to limit this. So rather than leaving my stop loss there, I actually moved it up underneath this area here. Okay. And as you can see, price did go against me and close me out, but I'm glad I did because what I ended up doing was limiting my loss. Okay. Instead of a $750 loss on my bigger account, my bigger challenge account, I limited it to like 320 because I saved about $400 extra losses by looking ahead and seeing that we're risk off right now. Metals are up, everything else is down. I wanted to limit my loss because I knew I was probably going to get a loss when we started rolling over. We got these wicks on the top sides up here, and that just screamed we're making another move down, and sure enough, we did. So I'm glad I moved it. I still had a loss, but it was a very tiny loss. We're talking 0.15% loss. Okay. So I consider that a win. 0.1 loss is better than a 0.3% loss. Right. So anyway, that was my Bitcoin position that I was in for not even 24 hours. I entered that Sunday night and then I closed it yesterday midday. So that's the only trade I've gotten in thus far. Again, I am kind of keeping an eye on these, on this this one here. But again, I just don't like the risk reward on these things. Where was my EuroCAD, by the way? Yeah, EuroCAD. So that was neutral. So I can't trade that anyway because it's not giving me a strong enough bearish reason. EuroCAD, dollar Swiss, Ethereum. Okay, I was watching kind of the same thing over here because it had a very similar daily 4-hour confluence. But again, risk off means I ignored that. Even though technically it looked pretty good. Despite the fact it did bounce into a higher time frame supply, right? Up here. So yeah, basically risk off, staying away from the cryptos at the moment. Where are my other alerts? Here we go. So yeah, after the show ends, I'll definitely have to kind of update everything here. But go take a look. Yeah. So see, Aussie Swiss, which was one of the top setups, it still hasn't given me any breaks of structures, right? Remember, I'm looking for this price action. That's why I've got my alert set. And it may very well keep dropping. And at the end of the day, keep me safe, right? Because that's the most important price area within this higher time frame demands. Again, is this candle right here. Down here, we got efficient price action, meaning we got candle bodies, candle wicks overlapping each other. So this is an efficient price structure. The only inefficiency is really right here. And it's not that strong. So it's another reason I'm being very careful because this wick to this wick, that's just a very small price change, meaning this is the leg out candle. It's just not that powerful. So yeah, I may very well stay out of this. Guys, I spend most of my days disqualifying zones. Think of myself as a retired trader, right? Prop firms, Damien. Yeah, I don't have any. So when it comes to my trading, I've been studying this stuff for 12 years now. I've never had big sums of capital. If you build it, they will come, right? So I'm just waiting for my opportunity. I do have a couple prop firms, Top One Trader. I got a 250K account with them. And then Ola Prime, which is where I was just working as a coach and streamer. I got a 100K account with them. So 350K in challenge accounts. So yeah, just looking for an opportunity to trade some actual capital. I need an angel investor is what I need. That's what I need. I know those are far and few in between. They're more text, but I gotta figure that out. I really do. But now when it comes to my challenge accounts, so on my 250K account, I dug into a pretty deep drawdown last year, early mid part of last year. Top One Trader. That's the one, Mr. Peeps. Top One Trader. I spent probably 2 years studying and looking at prop firms. And Top One Trader, so I just like their rules. Their rules appealed a little more to me for the way I trade. Now, there's one rule I despise that they have, but it's only on the instant funded accounts, and that's their equity stability score, the ESS rule that they have, where they basically take your biggest winner, your biggest loser, and they add it together, and then you divide that score by your total profits, and then multiply it by 100%. It's some crazy formula like that. But basically, you have to keep your score under 20%. So it's kind of similar to a consistency score, but it's just, I think it's a lot more strict. It's not on the challenge account that I have, so they don't have that crazy thing. It's just a 40%, no, 40 or 50% consistency score. I'm okay with that. But when it comes to instant funded accounts, I've been studying the hell out of these things for the last couple of weeks. I'm trying to find one. I can't find one that really jives with my rules because they either have a 15% consistency rule or, 5 to 7 day profitable day trades. Well, I'm a short-term swing trader. So I might have one good setup a week, one A+ with the way I trade. So the reality is I don't dig too deeply into the smaller time frames, the 5s and the 15-minute time frames, because my personal edge is the daily 4-hour confluence. That's where I personally have the most success. That's where I got a 65% win rate in the last quarter, is because I've just strictly stuck with the daily 4-hour confluences. And anyway, I don't get enough trading opportunities with my time frames to really jive well with a lot of these instant funded accounts. It's just a pain in the damn ass is what it is. Again, I could drop supply and demand works well on all the time frames, but the lower you go, there's just so much more noise. So, it just hasn't really been appealing to me. I know my edge on a daily 4-hour. But anyway, all these trading rules, all these consistency and everything, it's just frustrating. It's really frustrating. But thankfully, a lot of those rules aren't on the challenge accounts that I'm in. So I'm fine with those. Just takes time to pass, right? It takes time, especially when you're on a daily 4-hour time frame. I'm not trading on a 15 minute. So it's taken me longer. But the cool thing is when it comes to that top one trader account, that 250K account, I went in the hole 9,000. Went in the hole 9,000 early on last year. Partly because I didn't have the edge finder, guys. I didn't have this tool. As soon as I got this and I started getting away from the smaller time frames, I took off and now I've put it back over. So I completely dug myself out of that $9,000 hole. And I did that trading 0.2% risk. So remember, I'm just trading small risk. I'm not doing no crazy, 3/4 risk per trade, 1%, 2%. I don't do that. That's a quick way to blow your account. That's a quick way, no matter how experienced you are. That's for newer traders, that's the quickest way to blow your account, is when you're risking way too damn much. So whenever I do my coaching sessions with people, that's always the first thing I ask. Well, how much are you risking? And that's one of the first things because if at the end of the day, if you get in a trade and your gut doesn't feel right, your gut tells you a lot more than we give ourselves credit for, right? So that's obviously, super important. But yeah, for me, I dug out a $9,000 hole just from the higher time frames. So it takes me a little bit longer, what I'm trying to say. So a lot of these instant accounts, they just don't really jive well with me. What time frame do you usually enter a trade? So yeah, I try to find daily demand and supply zones. I try to find 4-hour zones within the higher time frames, so I can get my confluence, the daily 4-hour confluence. And then I'll step down to a 1-hour to try to find a 1-hour confluence. So as long as I got those 3 time frames matching up, and I've got a good fundamental and sentiment analysis reason to hop in that trade, I'm in. Okay? As long as I'm staying with the trend, as long as I've got those zones are creating volume, as long as the institutions helped create those zones, right? If the institutions are creating those zones, I'll typically get candles like this over here. Okay, the red, yellow. That's where institutions are hopping in this stuff. You and I, as a retail trader, can't do that. Big banks can, because they're trading hundreds of thousands, millions, tens of millions for their trades, for their positions. So as long as I got that creating a zone, that's a odds enhancer. The zone has to break a structure, right? I think actually I've got right here. Here's my trade plan right here. Okay. Number 1, fundamental analysis. Okay. I need to find out where my PMI, retail sales, all that data is at. Geopolitical events, right? Politics, guys, love it or hate it, we got to know politics, right? We got to know what President Trump's doing. it's super smart to have his Truth Social account so you can see exactly what's coming out of his mouth. Again, love him or hate him, doesn't matter. We're not here to play politics. We're here to make money. So we have to know what the big banks are doing. We have to know what the premiers, presidents, politicians, we have to know what they're flapping their lips about. Then we go to the sentiment. We got the COT. We got the retail sentiment. We got put to call ratios, AAIA investor sentiments. Okay. Looking at all the data there. And then we go into the technicals. I like to follow the Dixie, make sure I'm in line with that, especially if I'm trading dollar pairs. Buying low on the curve, selling high on the curve. Okay. That curve analysis we talked about. Trend, supply and demand zones. Are those zones creating fair value gaps? Meaning, is the leg out giving me a strong push? Is demand highly exceeding supply if it's a demand zone? If it is, it's going to leave a gap in its wake. VWAP, I like to see VWAP. I don't really do a whole lot of moving average bounces, but VWAP I like. VWAP's a pretty good one. I used to use it in penny stock trading quite a bit. And I've tested it in Forex, and it works pretty well in Forex too, just like, stocks, a lot of other things. So VWAP, really good odds enhancer, especially if it's going through a supply or a demand zone at the same time that I'm trying to buy or sell in that area. Woo. Okay, candlestick patterns, talking about bullish engulfing candles if I'm trying to buy in a demand zone, right? Or bearish engulfing if it's a supply zone. Making sure that price moved fast away from those zones when they were created. Making sure my zones are only 1 to 3 candles, because if price is barely spending any time in that zone, then that means there's probably going to be a lot of leftover unfilled orders. Regardless of the time frame, if price is making a whole bunch of candles, that's too much time, in my opinion, for the banks and the institutions to be able to layer in their order, their whole accumulation or distribution cycle. Talking about Wyckoff theory, guys. So yeah, the least amount of time creating a zone, the better. Fair market value, that's the master pattern. That's the contraction boxes I was showing you. Okay, contraction, expansion, trend. You're going to get those expansion legs. That's the banks testing liquidity on both sides of that contraction box. So I got to make sure that I'm buying under value or selling over value, right? But as far as the order of operations, that's it. Supply and demand zones with strong fair value gaps. This is the main things I look at. And then master pattern, making sure I'm buying under value, selling above value, which basically coincides with your curve analysis. I need volume spikes on the creation of those zones. Like I said earlier, I need my engulfing candles, hammers, shooting stars. When it comes to the candles, momentum, RSI divergence, that's another one that I like to do. Okay, I don't use a lot of indicators. I prefer just a naked chart. But I do like to look at RSIs just to make sure I'm getting some divergence. Now, it's obviously a lagging indicator, but that's a lagging indicator I like, because it's showing, hey, are we starting to get those, those positive or negative divergences? I like to see those negative divergences when we're hitting zones. And then confirmation entry, break of structure, I already mentioned that. Fibonacci retracements, I don't use a whole lot, but sometimes I like to see where the liquidity's at, where the retail traders are at, where they're placing their buy and sell orders, right? Because that will tell me a lot, because that's what the banks are looking for. The banks love Fibonacci retracers because they know everybody's going to be buying and selling at the 61.8, right? They know if they're going to do that, they know where they're going to put their stop losses. So that's all I try to do, is just think like a bank. If we think like a bank and ride their coattails, guys, we can make a lot of money on this stuff. It's still hard, though. It's way easier said than done. But and then, yeah, same thing with support and resistance. Hey, where's the liquidity at? Kind of say that kind of lumps in with Fibonacci, in my opinion. So, ladies and gents, it is 8:00 a.m. my time. That's all I got. I will be on Trader Nick's show again. For those of you that remember, I was on his show last week. I believe I am on today. I think in about an hour and a half. I need to double check. But yeah. Okay, yeah. So I just got the confirmation. So yeah, 9:30 a.m. Central Standard Time. So here in 1.5 hours, guys, you can actually catch me over here on Trader Nick. Okay. So at Trader Nick, and you can just click on his live button, but I'll be on, and I'll be on there for 30 minutes. So come over and say hi there, guys. A good friend of mine. This is the guy, okay, that developed and created the Edge Finder. Now, remember, I can't talk highly enough about this tool. It has completely changed my mind. Remember, I was in a $9,000 hole on my challenge accounts, and using this, I successfully dug my way out back to the positive side. So anyway, that's Trader Nick, and we'd love to see you guys there. But with that, ladies and gents, have a good one. And then the last thing, I do already have my live stream link ready for tomorrow. So just click over here on @TradeLikeATiger where you're on right now, and you'll already see that I've got my January 21st link ready to roll. I'm going to try to do this, push these out like a couple days in advance. That way you guys can click the notify me button like that, okay, and it can holler at you. And that way you, if you're forgetful like I am, it'll yell at you, Mr. Peeps, my show is starting, that kind of thing. So anyway, guys, peace and love. Have a wonderful day. We'll talk to you tomorrow.